So I think we are recording now. Welcome everyone and thank you so much for joining in. So today, as you can see, we are going to look at this price action of Bitcoin here in a bigger time frame, because we know, guys, in a bigger time frame the price of Bitcoin has just started this capitulation phase. Why? Because we have seen in the past price action, and I've been very clear with you also about this scenario. Whenever this RSI line in a monthly time frame has dropped below 50 level, and at the same time this William percentage are also below -80, after that we have seen more of a range bound or so-called capitulation phase, and only after this RSI line jumping above 50 level and at the same time this William percentage are above -80, that has indicated this capitulation phase has ended, and now we could be starting this new marker phase. Here, a very similar scenario when the price of Bitcoin was showing this downward movement. We entered this capitulation phase, which lasted almost like 182 days. Here, this capitulation phase lasted 274 days, and when we broke out of this 50 line, this RSI line in a monthly went above 50, and at the same time this William percentage are above -80. After that, we saw a very nice price movement. This might look smaller movement, but if you look at this, you can see it's almost like around 190 to 185%. Here, right, we have just started this capitulation phase. The RSI line has just started appearing below 50 level, and at the same time, this William percentage are around -80. So when are we expecting an actual movement to happen? Only when this RSI line, right, after this capitulation phase starts again above 50 level, and at the same time we also want the confirmation from this William percentage R. So when this William percentage R appears above -80 and at the same time RSI line in a monthly time frame above 50, then only we are aware that this capitulation phase has ended and we could be slowly starting this new marker phase. So for the immediate short term, I don't want to speculate in price action, but for the upcoming days or upcoming month, we have to expect more of a range bound type of scenario, guys. Even a pullback, right? Even a pullback before we show an actual movement here in this manner. So that's why we have to be very clear, because the price of Bitcoin could be showing more of a range bound, also a pullback, right? And then only starting this new marker phase. The reason why we are expecting some sort of a pullback to happen is because, if you are aware, we have talked about this scenario plenty of time in my video. Whenever the price of Bitcoin has broken the support from this 50 weekly, we have always got gravitated towards this 200 weekly moving average. Same scenario has unfolded again and again as soon as the price broke out of this 50 weekly moving average. So in our case, since we have also left the support from this 50 weekly moving average, which not just only was holding the price but also rejected the price when we were trying to break above it, and after that we saw this price retracement. So that's why, according to this example, also in the past price action, whenever we have lost the support from this 50, we got gravitated towards the 200 weekly moving average. So that's why we are also expecting this downward price movement to end after reaching around this 200 weekly moving average. So that's why here in a monthly I was showing you more of a range bound and even a pullback, right? And this pullback, if it's going to happen, then you can see, guys, we could be lining around this 200 weekly moving average, and only after that starting this new marker phase for Bitcoin. And beside this, guys, what I also want to include into this video is this bear flag, which we have also already talked in my video. According to the bear flag, if we look at this price action, let me show you here. If you monitor the price movement of Bitcoin here in a weekly time frame and simply add this rising trend line, because according to this rising trend line in a downtrend, you can see the lower line was an extremely important line of support, upper line was a strong line of resistance. And now if you follow this price movement here to the downside, then you can see, guys, we could be getting gravitated towards this 200 weekly moving average before an actual accumulation phase, and only after that a new marker phase. So that's why, according to this bear flag, according to this moving averages, according to this accumulation or so-called capitulation phase, we are expecting more of price retracement towards this 200 weekly moving average. Beside this, what I also want to include today is this S&P 500 chart, because we are aware crypto is still very much correlated with traditional market. I want to show you one thing. This S&P 500 is pointing out maybe the bottom might not be in yet. Why? Because if you take this movement from this swing high till this swing low, S&P 500 has dropped almost like around 21%. Here from 2020, the Black Swan event, 35%. Another one in 2007, 2008, you can see 57%, or this .com bubble, 51%. So in average, the drop has always been around 40, 35 at that range. And right now, the correction what we are witnessing is only 21%. It could drop around this 35% before again showing any sort of a impulsive movement. Why? Because we are aware inflation is the biggest problem what we are facing right now, because the CPI index, if you look at this, the consumer price index accelerated 8.3% in April, more than 8.1 estimated, and near the highest level in more than 40 years. Keep this in mind. Again, what happened after that? Fed raises rate 0.5 percentage point. So the Federal Reserve increased its benchmark interest rate by 0.5 percentage point in line with the market expectations. And you know what, guys? They are also, in addition, the central bank outline a program in which it eventually will reduce its bond holding by 95 billion a month. And this 0.5 percentage raise was the largest since 2000. And this is also showing us or flashing us now the Fed is going very hawkish. Hawkish Fed will actually impact the market, because we know, guys, if the Fed, right, if the Fed is going to be dovish, the inflation might not be in control. So they are bound to hike up the interest rate so that the CPI index could go lower and people living in a lower wages could afford this normal standard. So that's why Fed is being hawkish, right? We can see, because since 1981, if you look at this interest rate high, clearly heading to the downside. And when we came across this area where we were almost like around at 0%, right, interest rate, now this wave has just started. So if you look at this, the bottom was in, and slowly we could be seeing some more interest rate high coming in the upcoming months. So this is also indicating that we might not be at the bottom here, according to this Shiller PE ratio, S&P 500 Shiller PE ratio. Because according to this S&P 500 Shiller PE ratio, let me show you first what this actually is. Price earning ratio is based on average inflation adjusted earning from the previous 10 years, known as cyclic adjustment PE ratio, CAPE ratio, Shiller PE ratio, or PE10. So in another word, the Shiller PE ratio gives investor a read on whether the stock market as represented by the S&P 500 is overvalued or undervalued. The higher the Shiller PE ratio, the more overvalued a market, or the lower the Shiller PE ratio, undervalued the market. So now what can we get from this Shiller PE ratio for S&P 500? Whenever we have seen this Shiller PE ratio above 35 to 40, guys, that has indicated a big warning signal, because this has happened only once when we had this .com bubble in 1999 or 2000. After that, we saw S&P 500 dropped almost like 51%. So that's why the Shiller PE ratio was almost at around 41, and now we are hovering around this 36. So this means, according to this Shiller PE ratio, you can see the market is overvalued. So when is it going to be undervalued? When this Shiller PE ratio again starts appearing at an average area which is going to be between 15 to 20. So that's why if we look at this Shiller PE ratio, right, between 15 to 20, you can see we could be still very much overvalued. So that's why I want you guys to be very careful at this current stage. And if traditional market is going to see this retracement, and it's also pointing out this bottom might not be in yet, then whether we like it or not, this will definitely pull the price of Bitcoin also lower. So these are some of the quick updates that I wanted to share with you in today's video. If you enjoyed my work, then do hit the like button, and also for those individuals watching this for the first time, hit the subscribe button and the bell. So by saying this, I'm signing out. My name is Anup. Bye bye.